So you're looking into a precious metal IRA, maybe thinking about diversifying your retirement savings. Smart idea.
Definitely a popular option for diversification these days.
But let's be honest, navigating all the financial rules and regs, it can feel pretty overwhelming, like finding a needle in a haystack sometimes.
It really can. There's a lot to keep track of.
That's exactly why we're here today. Our mission is, well, pretty straightforward.
Oh,
We want to take all this detailed info on precious metal IRA, rules the stuff from Doug Young, and boil down to what you really need to know.
yeah, we've gone through the rules, the regulations, the FAQs, the works.
We've done the sifting, so you don't have to.
Exactly. So this deep dive, it's all about those specific regulations for precious metal IRAs, straight from the source material.
Think of it as your clear guide to investing the right way, compliantly, and, protecting your financial future in this space.
Spot on. Okay, so let's maybe start with the why. Why all these rules in the first place?
Good question. It might seem like just extra red tape, right?
Mm,
But according to the source, these IRS regulations, they actually have a core purpose.
which is?
It's really about ensuring fair practice and, crucially, safeguarding those tax advantages that come with retirement accounts.
Ah, right. Keeping things above board and making sure the tax breaks are used as intended for retirement. Not for, say, quick speculation.
Exactly. They don't want these things turning into something they're not meant to be.
And if you don't follow the rules.
That's where it gets serious. The consequences aren't trivial. We're talking potentially hefty penalties, losing the tax benefits altogether.
Ouch.
Yeah, even possible fines, or in the worst case scenario, having the whole IRA disqualified.
Okay, so compliance is absolutely key to protecting your investment. Definitely something you want to avoid messing up.
Absolutely. So keeping that investment safe means knowing what kind of precious metals can actually go into one of these IRAs. It's not just any old gold coin, is it?
No, definitely not. The IRS is very specific. There are only 4 eligible metals: gold, silver, platinum, and palladium.
Okay, the big 4.
Right. And each one has really strict purity requirements. For gold, it's got to be at least 99.5% pure.
99.5.
Silver needs to be even purer, 99.9%. And both platinum and palladium have to hit 99.95% purity.
Wow, those are high standards. Ensures you're getting the real deal, I suppose, just the metal value.
Precisely. It's about the intrinsic metal value, not other alloys mixed in.
So what about where the metal comes from? Like, does it matter if it's a bar or a coin?
Oh, absolutely. If you're looking at bars, they must come from refiners or assayers who are accredited, recognized by the major exchanges and industry bodies.
So like properly certified sources.
Exactly. It guarantees a trustworthy standard for weight and purity. Now, coins are a bit different. They generally need to be government minted and meet those same high purity levels.
Okay, government mints, got it. And what's definitely not allowed?
The source is very clear here. Collectible coins, the numismatic ones valued for rarity and jewelry, are completely out. No go.
Right, makes sense. It's an investment in the metal, not a collectible hobby. So with all these specifics, how do you even make sure you're buying the right stuff?
Yeah, that's a really practical point. And that's where working with reputable gold IRA companies is so vital.
Ah, the specialists.
Exactly. They know the rules inside out. They deal specifically in IRA-approved metals, and they provide all the necessary paperwork, the certifications, to prove that what you're buying meets those IRS standards for eligibility and purity.
So they kind of guide you through that verification process.
They do. They're the experts in navigating these specific requirements. Plus, they often have relationships with the custodians we'll talk about later.
Okay, good tip. Working with pros sounds like the way to go. All right, let's shift gears. Putting money in, are there limits, like with a regular IRA or 401k?
Yes, indeed. The annual contribution limits are the same. For 2024 and also for 2025, that limit is $7,000 per year.
$7,000. Okay.
But there's a catch-up provision. If you're age 50 or over, you can contribute an extra $1,000.
Ah, the catch-up. So $8,000 total possible for the over 50s.
Correct. $8,000 total. And it's really important to remember these limits aren't set in stone forever. The IRS can, and sometimes does, change them. So you need to stay updated year to year.
Good point. And, what if someone puts in too much, slips up and goes over the limit?
Yeah, over-contributing is something to watch out for. It can trigger penalties. Our source material specifically flags a potential 6% penalty on that excess amount.
6%. Okay, not huge, but definitely adds up and eats into your savings unnecessarily. Better to stay within the lines.
Absolutely. Monitor those contributions carefully.
Right. So We know what metals and how much money. Now, how do you actually get the funds into the precious metal IRA? Especially if you're moving money from another retirement account, you want to avoid taxes and penalties, right?
Exactly. There are a couple of main ways. You can, of course, just contribute new money up to the limit we just discussed.
Fresh cash.
Right. Or, very commonly, people fund them using rollovers or transfers from other existing retirement accounts. Think like an old 401k from a previous job, or maybe a traditional IRA you already have.
And I remember the source mentioning different types of rollovers, direct and indirect. What's the difference there?
Good pickup. Yes, two main methods. The direct transfer, sometimes called a trustee-to-trustee transfer, is usually the simplest and, frankly, the safest.
How does that work?
The money moves directly from your current retirement account provider straight to the custodian of your new precious metal IRA. You never actually touch the money.
So it bypasses you completely.
Exactly. And because you never take possession of the funds, there are zero tax implications. No reporting headaches, no risk of missing deadlines. It's just a clean transfer between the institutions.
Okay, that sounds pretty smooth. What about the other one, the indirect transfer? Sounds less smooth.
It definitely has more potential pitfalls. With an indirect transfer or a 60-day rollover, the money from your old account is actually sent to you personally, like a check made out to you. Then you have exactly 60 days from the day you receive those funds to deposit that same amount into your new precious metal IRA.
60 days. That sounds like a deadline you wouldn't want to miss.
You really don't. Because if you miss that 60-day window, even by a day, the IRS treats that money as a taxable distribution.
Oof. So income tax plus potentially that 10% early withdrawal penalty if you're under 59 and a half.
Precisely. So because of that risk, life happens. Things get delayed. The direct transfer is almost always the recommended route. It just removes that potential for error.
Yeah, seems like a no-brainer to go direct if possible. Always good to check for any admin fees either way, though, I suppose.
Good point. Yes, always ask both the sending and receiving custodians about any potential transfer fees. Yeah. Usually minor, but good to know up front.
Okay, so you've bought the right metal, you've funded the account correctly. Now, where does this actual gold or silver live? Can you just, I don't know, keep it in your safe deposit box down at the bank?
The storage question. This is a big one, and the answer is a firm no.
No home storage, no bank box.
Absolutely not. This is a non-negotiable IRS rule. To be compliant, all the precious metals held inside your IRA must be stored in an IRS-approved depository.
An IRS-approved depository, okay? Why are they so strict about that? It seems like it'd be easier to keep it close.
It might seem easier, but the rule is there for really important reasons. Mainly security and maintaining the integrity of the investment as a retirement asset.
How so?
These approved depositories are specialized high-security facilities. Think vaults, advanced surveillance, insurance specifically covering precious metals. It ensures the metals are safe from theft or damage.
Okay, security makes sense.
And it also prevents commingling with your personal assets and ensures there's a clear chain of custody. Plus, our source highlights another key piece. You need a licensed custodian to manage the storage. You can't just arrange it yourself.
So a third party is always involved in holding the physical metal?
Always. That custodian works with the depository. It adds a layer of accountability and verification that satisfies the IRS requirements and honestly protects you and the legitimacy of the IRA.
Right. It keeps everything properly separated and accounted for. Okay. Security, accountability. Got it. So let's jump ahead. You've held the metals for years. You're approaching retirement. When can you actually take the metals out or take distributions without getting hit by penalties?
Okay. Withdrawals. The general rule is pretty much the same as for other traditional IRAs. You can start taking penalty-free distributions once you reach age 59 and a half.
59 and a half, the magic number.
That's the one. If you take money out before that age, you're generally looking at that 10% early withdrawal penalty, plus you'll owe ordinary income tax on the amount you withdraw, assuming it's a traditional IRA, of course.
Right, the standard early withdrawal sting. What about later on? Do you have to start taking money out at some point?
Yes. Once you hit age 73, the rules around required minimum distributions, or RMDs, kick in.
RMDs, okay.
This means you have to start withdrawing a certain minimum amount each year. The calculation is based on your account balance and your life expectancy, according to IRS tables.
And what if you forget or just don't take the RMD?
That's a costly mistake. The penalty for failing to take your required RMD is severe. It's 50%.
50? Wow, 50.
Yes, 50% of the amount you should have withdrawn but didn't. So yeah, the IRS is very serious about making sure funds eventually come out of these tax-deferred accounts.
They definitely want their share eventually. Okay, so clearly the IRS is keeping tabs.
Yeah.
What kind of paperwork or reporting should you expect year to year?
Right, reporting is key for staying compliant. Your IRA custodian handles a lot of this. Every year, they'll send both you and the IRS a form called Form 5498.
5498, what's that show?
It basically reports the fair market value of your IRA assets as of December 31st of the previous year. It also reports any contributions made for that year.
Okay, end of year value and contributions. What if you take money out or move money around, like with those rollovers?
Good question. If you take any distributions or if you do a rollover, your custodian will issue Form 1099-R.
1099-R, that sounds familiar.
Yeah, it's the standard form for reporting distributions from pensions, annuities, retirement plans, IRAs, etc. It details the gross distribution, the taxable amount, any taxes withheld, and codes explaining the type of distribution.
So it captures all the money coming out or moving between accounts.
Exactly. And it's crucial that you keep track of these forms and report the information accurately on your own tax return.
Yeah.
Good record keeping avoids headaches down the line.
Definitely. Now, a question that probably pops up, can you borrow against your precious metal IRA? Say, if you need cash for an emergency.
That's a common thought, but the source material is clear. No, you cannot directly borrow money from any IRA, including a precious metal IRA.
Not allowed at all.
Nope. If you try to use your IRA assets as collateral for a loan or simply take money out as a loan, the IRS treats it as a taxable distribution.
So taxes and potentially penalties apply immediately.
Right. It defeats the purpose of the tax advantage retirement account.
But what about that 60-day rollover thing we talked about? Couldn't you technically take money out and put it back within 60 days? Use it as a very short-term loan.
You're circling back to the indirect rollover. And while technically the mechanism allows funds to be out of an IRA for up to 60 days, using it as a planned short-term loan is incredibly risky.
Why so risky? Seems straightforward. Just put it back.
Well, remember that absolute deadline. If anything prevents you from redepositing the exact amount back into an IRA within those 60 days, a bank delay, a calculation error, anything, the whole amount becomes taxable, penalties may apply, and you can't undo it.
Yeah. A lot could go wrong in 60 days. Maybe unexpected expenses pop up and you can't put the full amount back.
Exactly. It's really not designed for borrowing. Our source strongly implies you should avoid this strategy. Direct transfers are the way for moving funds, and borrowing isn't permitted.
Got it. Treat the IRA funds as locked up for retirement, basically. Okay, let's swing back to the why. What are the tax advantages people are aiming for with these accounts?
The tax benefits are definitely a major draw. It depends slightly on whether you choose a traditional or a Roth precious metal IRA.
Okay, let's start with traditional.
With a traditional gold IRA, your contributions might be tax deductible in the year you make them.
Might be.
Yeah, it depends on your income level and whether you or your spouse are covered by a retirement plan at work. But if you qualify for the deduction, it lowers your taxable income right now.
Okay, potential tax break now. And the investments grow how?
They grow tax deferred, meaning you don't pay taxes on any gains year after year. You only pay income tax when you take qualified distributions in retirement.
Got it. Tax break now, taxes later. What about the Roth version?
The Roth flips it. You contribute money you've already paid taxes on, so no upfront tax deduction.
After tax money goes in.
Right. But the huge benefit comes later. Your investments still grow tax-free, and then, provided you meet the requirements, all your qualified withdrawals in retirement are completely tax-free.
Ah, tax-free on the way out. That sounds appealing, especially if you think you'll be in a higher tax bracket later.
Exactly. That's often the calculation people make. Okay. So whether it's tax-deferred or tax-free growth and withdrawals, the tax advantage is a key feature.
Makes sense. So, we've covered a lot of rules. What are some of the most common mistakes, the source flags that people make, the real pitfalls to watch out for?
Yeah, a few key ones keep coming up. First, and we've hit this a few times, not properly verifying the metal's purity and eligibility before buying. You absolutely have to get that right.
Buying the wrong stuff by mistake. Okay, what else?
Exceeding those annual contribution limits we discussed, that leads to penalties.
Right, the 6% penalty potentially.
And the third big one is improper storage. Trying to store the metals at home or anywhere other than an IRS-approved depository, that's a major compliance failure.
So purity, limits, and storage. Got it. Now, you mentioned gold IRA companies and custodians earlier. Can we just clarify their different roles again? Who does what?
Sure, it's an important distinction. Think of the gold IRA company as like the facilitator or broker, especially at the beginning.
Okay, the ones helping you set it up and buy the metal.
Exactly. They assist with opening the account, they help you purchase the specific IRA-approved metals, maybe sell them later, and they often liaise between you and the custodian.
So they handle the transaction side of things?
Pretty much. Now, the custodian is the financial institution that actually holds and administers your IRA account itself.
So they're the official account manager.
That's right. They handle all the critical administrative stuff.
Yeah.
Record keeping, sending out those IRS forms like 5498 and 1099-R, ensuring everything stays compliant with regulations, processing contributions and distributions, and overseeing the storage arrangement with the depository.
They're the ones making sure all the I's are dotted and the T's are crossed with the IRS.
Precisely. They have the fiduciary responsibility for the account's administration. That's why choosing reputable, experienced gold IRA companies and custodians is so crucial. Check their track records, fees, transparency.
Right. Due diligence on both fronts is key.
Yeah.
This has been super helpful in breaking down what can seem pretty dense. Maybe we can quickly run through some of those specific FAQ highlights from the source, just to reinforce the main points.
Good idea. Let's nail down the key takeaways. So first, eligible metals. Remember, it's gold, 99.5%, silver, 99.9%, and platinum and palladium, both 99.95% pure.
Purity is paramount.
Funding. You can use new contributions within the limits or rollovers transfers from other retirement accounts, but stick to the IRS rules, especially favoring direct transfers over those risky 60-day rollovers.
Direct transfer is the safer bet. Got it. And storage.
Cannot stress this enough, no home storage. It must be in an IRS-approved depository managed by your custodian. It's about security and compliance.
Depository only. Check. Tax benefits.
Traditional IRAs offer potential upfront deductions and tax-deferred growth. Roth IRAs use after-tax money but give you tax-free growth and tax-free qualified withdrawals in retirement. Choose based on your tax situation and outlook.
And that penalty for putting in too much money.
Watch those contribution limits.
Yeah.
$7 or $8 if 50 plus for 2024-25. Exceeding them could mean a 6% penalty on the excess each year it remains.
Okay, great recap. So the big picture here really seems to be know the rules, follow the rules, understand the eligible metals, store them correctly, respect the contribution limits, handle rollovers properly.
Exactly. It's all about maintaining that compliance to protect the tax advantages and, just as importantly, avoid those potentially nasty penalties.
Being an informed investor is critical here.
It really is.
Mhm.
But by understanding these key regulations, which we've hopefully clarified today, you're in a much better position to make decisions confidently if you're considering a precious metal IRA.
Absolutely. So the final thought for you, the listener, is this. Now that you have a clearer picture of the regulatory framework, the specific metals, the storage rules, the limits, the compliance needs, how might adding precious metals within these rules fit into your own retirement plan?
Yeah, does that potential for diversification, for holding a tangible asset, align with your long-term goals and your tolerance for risk, knowing the specific requirements involved?
It's definitely something to mull over as you map out your financial future.